All right. Well, on that note, we have to turn to another company, and in fact, on the back of earnings, we're focusing in on Mahindra Holidays, and we're joined by the management, Kavinder Singh, who is the managing director as well as the chief executive officer of the company. Thank you, Mr. Singh, for taking the time. Let's talk about EBITDA growth. The question, of course, is what drove that EBITDA growth? And this is, of course, in the context of massive expansion in margins. Is it sustainable, and what have the revenue drivers during the quarter been?
We are focused on 3 Ps, people, planet, and profit. If I were to share the good news on the people, for 2 years in a row, we have been rated as the best workplace in hotels and resorts by Great Place to Work, and we also reached our highest rank within the top 100 companies. We are ranked at 20. And in terms of planet, I shared with you the 7 resorts which are rated as green resorts. In terms of profitability, our profit margin is at about 15%, which is almost best in class in our businesses. And most importantly, our profit after tax also grew 24% on YOY. Even at the consolidated level, you can see whether there has been a significant improvement in revenue at 52%, 75% growth in EBITDA, and of course margin expansion from 18 to 20.7. So as far as sustainability of margins is concerned, I think what we need to do is continue our focus on 2 things. Keep growing our top line through the addition of rooms. Of course, there's a cost that comes in when you add rooms. You need to always ensure that you are quickly able to fill up the rooms, because the costs come in little ahead in terms of whether it's a financing cost or a depreciation cost. Just we have to do it in such a manner that we are able to add rooms at a brisk pace, fill them up very well, ensure that we are cost efficient, and create huge value for our customers. Because I think in these times of inflation, it's not about the price, it's also about the value that you create for the customers. And that's what we are focused on.
Good morning, Mr. Singh. This is Cheryl for joining in the conversation. And yes, we have seen a rise in the occupancy level for the industry as well. And given that you've seen over 80% occupancy level, is there any scope for further improvement?
Yeah. So occupancy for us is a very important metric. And as you know that we have about 270,000 members. And when they come to holiday, they pay their annual fee, which also helps us in our annuity income with regards to annual fee. They come and spend money at the resorts, and therefore our resort income grows, which is what happened in this quarter. So I think if I look at this quarter, we are definitely above 80%. If I were to look at it, 82% we have already achieved in July. August, September is even looking better. So we could be around 83, 84% for the quarter. And by the way, I just wanted to mention one more thing. The cyclical part of our business is almost over. There is no cyclical pattern that we notice now. People are holidaying on almost all the months that I see. Minor variations. Of course, October, November, December is going to be another big quarter in terms of occupancies. And the best part is that we are adding rooms and resorts, and yet we are able to fill them. And to my mind, that is what shows the strength of the business, because if you are adding rooms and resorts, and if you are able to continuously fill them up, then you are on an absolutely good trajectory. And that is what we are focused on. And even in terms of member additions, we had very healthy member additions at 3,807. Most importantly, almost very large percentage of these members came with very high down payment. And therefore, you may have noticed our average unit realization almost doubled.
Okay, Mr. Singh, I take that point, but in terms of capacity, what have been the resort additions domestically as well as internationally, and what are the capex plans for the year? Any acquisitions that you've lined up?
As far as our resort additions are concerned, we have a 200 crore project going on in Kandaghat near Shimla. It's an expansion of an existing resort. We are likely to break ground in this quarter in Ganpati Phule, which is going to be a very beautiful seaside resort that will entail an investment of about 250 crores. We are waiting for just very last few approvals left for us to go ahead and break the ground. So these will be two big mega expansions that are going on. In addition, we will be doing expansions of our existing resorts in Pondicherry with about 60 rooms. That will be investment of about 60-70 crores. There will be another 50-odd crores that we will spend in our Goa Samoda resort and add another 40-45 rooms. And then further, we have land banks that we have sort of taken charge of. So there are some projects which are being planned. Parallelly, we are looking at acquisition of properties. I'm not in a position to tell you what's going to happen, but you will definitely hear soon about that as well. And as far as leasing is concerned, our pipeline is very good. We are constantly looking. And by the way, the good news for us is that because we are so clear, even during the pandemic, that we want to keep growing, we are not even putting any pause in our plans. And as a result of which, we have a very good pipeline and a very good set of leads coming to us for people who would like to give their resorts to us on lease or would like us to co-invest in some of their resorts. So we are open to all possibilities, and that is I think is fueling a clearly a 1,200 to 1,500 crores kind of a capital expenditure plan that we have, which is clearly right now in the right phase and right scale of focus as we speak.
Thank you, Mr. Singh. We leave it there. Thank you so much for joining us on the show and to talk about the quarter gone by and what's expected ahead for Mahindra Holidays. That was the management of Mahindra Holidays. And from one management to another.